I speak to Leith Van Onselen, Chief Economist at the MB Fund at MB Super, one of the big wigs at macrobusiness.com.au. It's where I get my financial and economic news and commentary every day. It's exceptional. And I have to thank all the listeners who get in touch before and after I speak to Leith, telling us, or telling me particularly, how much they enjoy the contribution of Leith Van Onselen. I agree. It's next level. And I'm delighted to say, as he is here every Saturday, he's here again today, and he's on the line. How are you going?
Good, thank you, Luke. How about yourself?
Very well indeed, mate. Very well indeed. Of course, this week's been dominated by Donald Trump and the tariffs. Oh, look, you'll have your analysis, but nothing new here. He was talking about tariffs all the way through his campaign. He got an unbelievable result in the USA. The people wanted him. They've got him. He's doing what he said he'd do. Now, that is foreign to many in the political class. And there are those that are looking on and going, oh, what the hell? But he's upsetting the political class and the bureaucrats. He's standing up for his people. He's seen big job numbers today. Now, on the other side of that, our farmers are under pressure. I think that's really unfair and unwarranted. And we've seen stock markets tumble around the place. But that's just an observer. What about an informed economist? What do you make of it all?
Yeah, look, to be honest with you, Luke, I think this is going to end up backfiring on him because basically these steep tariffs. So I might as well go through quickly what they're about. So Good. Obviously, he announced them on Thursday, the Liberation Day retaliatory tariffs. And what it does is basically imposes tariffs between 10 and 48% on trading partners. Now, look, I've got to admit that the methodology behind the calculation is nonsensical. So what he's effectively done is he's calculated the tariff that he charges based on the size of the US trade deficit, effectively, and how much the US imports from those nations. And so effectively, the bigger the trade deficit, the bigger the retaliatory tariff, which is a very perverse way of doing it. And luckily, Australia got hit with the minimum 10% tariff. So basically, he set a minimum of 10% and then anything up to nearly 50%. And the reason why we got the minimum 10% was because the US actually has a giant trade surplus with Australia. So the US typically exports more than double what it imports from Australia. So, for example, in the 2023-24 financial year, the US exported $88.2 billion. That's in Australian dollars, versus importing $37.5 billion as a result. So, and as a result, Australia got let off, relatively lightly.
Yeah. But is that why Iran and Yemen got the same deal we got?
Yeah, probably. I mean, I haven't gone through every single country, but there's certainly a lot which are like 10% tariffs, and those tend to be the ones where the US has a trade surplus.
Yeah.
But the countries where it has a trade deficit, China and some of the Asian nations, etc., it actually, in Vietnam, for example, got smashed. He set a really high tariff on those countries. And
what about Norfolk Island? 29%.
Yeah, look. There are absolutely ridiculous cases there where there's some places where basically nobody lives and they barely trade, and he's put tariffs on them, which is a bit weird. So the whole thing is just a very ad hoc. Doesn't really make a lot of sense to me. It's not targeted or anything like that. Now, obviously, the financial markets hated this. The S&P 500 in the US lost $5 trillion in value in 2 days. Now, that's worse than at the start of the pandemic in March 2020 when it lost just over 3%. So, we're talking very heavy losses here. And in Australia, the ASX 200 fell 0.9% on Thursday and about 2.5% on Friday. And given that, the US market leads our market and they were open today when obviously it's a weekend here because we're a day ahead, we're probably going to experience big falls on Monday as well. Yeah. Because we'll take that lead. And there was the worst week in the Australian share market since June 2022, with nearly 70 billion wiped off Aussie shares. So it's obviously not great, but the direct impacts of the tariffs on Australia are actually pretty small. So Australia only exports, only 4% of Australia's exports are to the US. So obviously a 10% tariff on, 4% of your exports isn't going to hurt us too much in a macro sense. The bigger impact is the indirect impacts. So, these tariffs, assuming there's retaliatory action, it depends on, whether other countries retaliate, then they hike tariffs and all this sort of thing. But certainly the chances of a global recession have increased. And AMP chief economist Shane Oliver he raised his probability of the US experiencing a recession to 40%, and he also believes global growth is going to be cut by about a third based on these tariffs. But I'll preface that in that none of us know. We're in uncharted waters here, so everyone's just basically making guesses. So I wouldn't take anything hard and fast.
Are people panicking?
Sorry,
are people panicking?
Yes, well, certainly financial markets. If there's one thing they hate, so uncertainty's increased, confidence has been hit, and there's one thing financial markets hate, it's uncertainty.
Right.
And as a result, whenever there's some kind of black swan event or whatever, doesn't matter if it's the pandemic or it was 9/11 or the tech wreck or whatever, financial markets get smashed. And this is just a case of that. A bit of contagion, everyone starts selling off, etc. But the biggest impact on Australia is these indirect impacts if it slows the global economy. The other thing is Australia's three biggest export markets are China, Japan and Korea. And those nations are facing tariffs ranging from 24% to 34%. So the bigger risk to us is if the US buys a lot less goods from those nations, they'll then demand less imports from us. So we're talking iron ore, coal, energy, all those sorts of things. And that's where the rubber really hits the road for Australia. It's not the direct impact of the tariffs, which are pretty small because we don't export much to the US. And it's only a 10% tariff. It's these sort of second round impacts, the impact on the global economy overall, and also, just slower growth, less economic activity, financial markets getting smashed, which is a wealth effect on households, superannuation accounts, all that sort of stuff. And also our biggest trading export markets, if they get hammered because they've been tariffed quite heavily. That's the sort of risk to Australia. Now, there is a silver lining here. And, anybody who's carrying a decent-sized mortgage and is praying for rate cuts, one of the upside is that the RBA is far more likely to cut rates now than it was before for two reasons. So, obviously, the slower global growth and everything I've just mentioned and the increased uncertainty in financial markets getting hammered. But also, Australia's more likely to be dumped with cheaper goods from Asia, especially China, because if they're selling less into the US because of the tariffs, they're going to have surplus of goods and they're probably going to discount them and dump them in Australia. And what that'll do is that'll actually lower imported inflation into Australia. So that'll have downward impact on inflation. And as a result of the Trump's tariffs, the financial markets, like the futures markets for interest rates, they're now tipping 4 more rate cuts this year. So we've already had one, and they're tipping another 4, which could mean that the cash rate is at 3.1% at the end of the year, which is, it's still higher than it was during the pandemic, but obviously that's a, decent interest rate cut. And if this drags into next year, it'll probably go a lot lower as well. So that's good news, obviously, if you're a mortgage holder. And it could also, I'm not saying this is good or bad. I think it's actually bad if this happens, but it could also drive another house price boom because, obviously house prices tend to be, negatively correlated to interest rates. Interest rates fall, and people are more skittish about investing in the share market. They might drive back into property.
Yeah.
And that could lead to another house price boom, which I'm personally not a fan of because I've got 2 young children who will need housing at some point, and I want housing to get more expensive for them. But that's a value judgment.
Fascinating. Look, you took us to housing, and we can't not discuss what the ABS revealed this week in there. And this is approvals data, isn't it? This is not actually the construction of actual properties. This is approvals. What are the numbers like compared to what the government said they'd be? Because they see housing as a supply problem, almost liquid papering out their big Australia policy.
Oh, absolutely. So this is just another case of Groundhog Day. So we got some dwelling approvals data for February, and over the month, 15,400 homes were approved for construction, and that's 4,600 homes, or 23% less than the target. So the target is to build, 1.2 million homes over 5 years, and that requires 20,000 homes a month. Now, over the first 8 months of the Housing Accord, because it started on 1 July last year, only 123,800 dwellings were approved for construction. Now, that's 36,200, or 23% below the target of 160,000 over that 8 months. Now, as you just mentioned, the important thing to note here is that just because a home has been approved for construction doesn't mean that it's going to be built. And I checked over the history of the ABS's dwelling construction series, which goes all the way back to the 80s. And over that time period, 6% more homes have been approved for construction than were completed. So although we approved 15,400 in February, the chances are that probably only about 14,000 will actually end up being built if you base it on the average, which just means that we're even further behind the government's housing accord. And I say it every week here, the only viable solution to Australia's housing shortage is to bring demand back into line with supply by cutting immigration. So the latest federal budget that was released last week projected that Australia's population is going to grow by 1.8 million people over the next 5 years. And 1.4 million of those are going to be in New South Wales, Queensland and Victoria. So, and I'll also add that the latest population statement from the Centre for Population, which was run out of the Treasury, that came out in December, that said that Australia is going to grow by 13.5 million people over the next 40 years. Now, that's the same as adding another Sydney, Melbourne and Brisbane. So imagine just cutting and pasting Sydney, Melbourne and Brisbane into Australia in just 40 years. All the infrastructure, all the houses, all the water supplies, all the energy, all the public transport, everything that's in Sydney, Melbourne and Brisbane right now, we'd have to recreate again in another 40 years, with most of that being in Sydney, Melbourne and Brisbane. It's just an impossible equation here. Impossible. Like how can we possibly hope to solve the housing shortage by importing hundreds of thousands of extra people needing housing through immigration into the market every single year and hoping to grow the population by 50%, 13.5 million people, in just 40 years via extreme immigration? It's just, this equation just does not add up. It's an impossibility. And unfortunately, the federal government, the ABC, the Guardian and all these, YIMBY type people just seem to, the Grattan Institute, all these bodies just keep painting this problem as a supply problem. Oh, we just need to build more housing. Well, I'm sorry, you cannot build enough housing to keep up with, to grow the population by 13.5 million or 50% in just 40 years and hope that housing, infrastructure, water supplies, energy, everything are going to magically keep up with that number. It's just impossible. We haven't done it for 20 years since we've run this big immigration program. Big Australia's been running for 20 years now, since mid-2000s, and we haven't built enough infrastructure or housing over that period. So obviously, continuing with this policy folly
madness
for another 40 years is impossible.
Yeah,
it's never going to happen because it hasn't happened.
I think the important point to make is with those that have a memory that goes back more than a couple of weeks of the long drought we went through, I guess 5 or so years ago, and water restrictions in capital cities. Now, we've been fortunate to have widespread healthy rainfall, so dams have been full. But if we go back to so you add 1 million people to the equation and you don't increase the supply of water, I mean, what are we to do? Turn up at a return and earn and say, can you fill this up for me? I mean, that to me is a glaring, dangerous, reckless government proposition that will add 1 million to the population and do next to nothing on water storage in a country that has a drought every so often.
It's even worse than that, Luke. So Sydney will supposedly add about 3 million people over the next 40 years. So, you're at under 5.5 million now. But, as you said, just before the pandemic, 2019, Sydney's water supplies were down about 20%. Well, okay, so let's add another 3 million to that. And, if the climate alarmists who keep going on about climate change, it's never going to rain again, all this sort of stuff.
Yes.
Well, can you imagine if I don't think they're going to be right, obviously. We've just seen a hell of a lot of rain in the last few years. But,
yeah, we have.
But, another millennial drought type situation is inevitable. They happen every 10 years or so, maybe 15 years, whatever it is.
Yeah.
The fact of the matter is, Sydney's going to be massively larger than it was during the 2019 drought next time around, and you're going to have millions of extra people who need water. This equation for housing, infrastructure, water supplies, energy, everything does not add up.
Yeah, of course. All right, mate, got to fly. Great to chat as always. Thanks so much.
Yeah, thanks, Luke. Speak to you next time.
Yeah, indeed. Leith Van Onselen, macrobusiness.com.au, macrobusiness.com.au. perma-housing.com.au. Back in a sec.